Okay, good morning. We'll get started. My name is Cindy Arnson. I'm director of the Latin American program here, and on behalf of the Wilson Center and also the World Bank, our partner in this event, I'm delighted to welcome you to today's conference on the governance of natural resource extraction in Latin America. Several years ago, as we will hear from our first panel, the main economic story in the region was how high commodity prices and the explosion of Chinese demand were fueling an economic boom in South America. This translated quickly into expanded social programs that lifted millions of people out of poverty and contributed, as Augusto Latorre has reminded us, to the largest middle class in Latin America's entire history. The storyline, of course, is grossly oversimplified, but there's no doubt that the region achieved enormous social progress during the boom years that are now looked at, I think, with hindsight, with no small measure of wistfulness as the golden decade. But even during the boom years, there were voices raised about the dangers of a re-commoditization of Latin American economies, what would happen when China's growth rates cooled, how to move into higher levels of the value-added chain, et cetera. But there were a host of other issues that came to the fore that were non-economic in nature. Issues of national and local government capacity to use revenues wisely, of corruption, lack of transparency, conflicts over land use and environmental impacts. All of these grew more intense, at times becoming deadly. We're privileged today to have speakers from multiple countries of Latin America. I'm not going to name them because I'm sure I'm going to forget some, but Argentina, Bolivia, Chile, Guatemala, what am I forgetting? Colombia, por favor, as well as people representing a variety of perspectives from the private sector to indigenous groups. Each person brings a vast personal experience concerning the governance, development, environmental, and social challenges that are posed by extractive industries. We have arranged today's sessions not simply to air all of the difficulties, of which we know there are many, but also to look for areas of convergence, if not consensus, at least areas of convergence over how to balance the interests of multiple stakeholders. Before turning the microphone over to Jorge Familiar, the Vice President of the World Bank for the Latin American and Caribbean region, I would like to express my deepest thanks to my co-organizers in this effort, Karin Kemper and Kevin McCall of the World Bank. Kevin, I don't even see you anymore. There you are. Thank you. Augusto Latorre, whose conversation over lunch so many months ago helped launch this process, and of course to Veronica Colon of the Latin American program, without whom nothing around here can be accomplished. So now it is my privilege to introduce Jorge Familiar. We can also wish him a happy birthday. And please, thank you very much.
So, good morning, everyone. Thank you so much, Cindy, and what a nice way to celebrate my birthday. Start the day talking about a critical issue for the Latin American Caribbean region. So I would like to, first of all, thank all the panelists that will be joining us throughout the day. They have traveled long and far to be here with us and share their wealth of experience. And I would very much like to thank also the Wilson Center for this very strong partnership that we have and that allow us to put together this type of engagement. And thank you so much, Cindy, because you're a fantastic partner to work with. The main topic of today's conference, natural resource governance, is of central concern to Latin America and the Caribbean, both governments and the population at large. Natural resources in general and extractive industries in particular have been important drivers of Latin America's growth, a particularly important driver during this period of time that we called the golden decade, during which we saw dramatic social transformation throughout Latin America. This decade brought huge rewards to the region. In 2013, Latin America received 27% of global exploration spending. In Peru, investment grew from 109 million in 2003 to 3.5 billion in 2013. And in Colombia, from 2009 to 2012, the share of public revenues generated by mining doubled from 12% to 25%. The influx of investments was a welcome economic stimulant, but also posed challenges for governments to manage these investments in a responsible, transparent, and equitable manner. It also opened opportunities for governments to address long-standing and important issues of concern for stakeholders within nations and across the region. And overall, the results are very positive because, as I mentioned, we saw a dramatic social transformation throughout the region. We have also seen a simultaneous positive trend in governments and industry focusing on the social and environmental impacts that so often go hand in hand with extractive development. And however, more recently, and as we all know, we are experiencing a very significant downturn, a much more complex economic environment affecting the region. And all these historic success, both on the social and the environmental and the economic front, is now at risk. So if these topics are important, the topics that are going to be discussed throughout the day are important when things are going well. I think it is even more important to talk about them when the environment is more challenging. Now, countries must not only deal with declining revenues linked to lower production, but they also need to deal with lower investment flows that hamper prospects of longer-term economic growth. And of course, throughout the region, the situation is not homogeneous. Not all countries are affected the same way. What we see is that South America is much more linked now to China in terms of economic cycle. And the Caribbean, Central America, Mexico are more closely linked to the U.S. And the impact of the value of commodities on the economic growth throughout the region is not necessarily homogeneous. Since before the signs that the golden decade was coming to an end, we at the World Bank Group have been working with countries throughout the region to look beyond the boom and see how governments can strategize to soften the impacts of the downturn, while at the same time managing and addressing environmental and social concerns. In this increasingly competitive environment, governments have a key role to play in proactively regulating the conditions for investments that secure long-term development, reduce poverty, and increase shared prosperity. The World Bank has been promoting early and active engagement of all relevant stakeholders to address environmental and social concerns and ensure that natural resource extraction is conducted in a responsible and inclusive way. This is grounded in our experience that the transparent and sound management of extractive resources and impacts from extractive activity helps citizens understand the benefits this industry can bring to resource-rich regions. It also enables citizens to engage with industry to ensure that extractives make positive contributions in the localities and communities where they operate. In a period of constrained economic outlook, the region cannot miss the opportunity to optimize its use of natural resources. Now, as much as during the golden decade, there are opportunities as well as needs for actions to improve how governments, companies, and civil society can collectively strengthen constructive collaboration to ensure open, transparent, and responsible public debate and policy making that instills trust on all sides. Countries across Latin America and the Caribbean are recognized as leaders in inclusive public dialogue and in rolling out policy frameworks that facilitate the transformation of mining investments into positive development outcomes that contribute to poverty reduction and boost shared prosperity. And I hope that the panel discussions that you will have today will illustrate the varied experiences across the region, as well as many of the often difficult lessons that have been learned in leveraging the extractive industry's contribution to environmentally sustainable and socially inclusive economic growth. Thank you very much.
Good morning, everybody. My name is James Gibney. I'm a member of the editorial board at Bloomberg View, and I'm very happy to be here this morning to moderate the first panel on extractive industries in Latin America and the Caribbean, the macroeconomic impact of the falling commodity prices, long-term price trends, and prospects. Just a public service announcement at the outset. If you need a headset for simultaneous translation and you didn't get one earlier, there are some out there for that. Anyway, I'm very happy to be here for this because it's a subject that crops up every day in my news feed at Bloomberg. This morning, for example, you'll find two of the top stories from Latin America on our site are about Central Americans cheering the price of oil and Brazilians crying about the halving of the price of iron ore. So, as Jorge Familiar is saying, there are many sides to this story. And we're very lucky to have two extremely insightful and experienced experts to talk about these issues. First, I'd like to introduce Augusto de la Torre, who is the chief economist for Latin America and the Caribbean at the World Bank. And then also Manlio Coviello, who is the chief of the Natural Resources and Energy Unit for what Donald Trump knows as ACLAC, I'm sure. And for what others know as the United Nations Economic Commission for Latin America and the Caribbean. So big thank you to our two panelists for joining us today. And I'll turn it over to you, Augusto, to start.
The technology glitches are solved. So first I want to start, of course, by thanking Cindy for hosting this conference. Throughout the day, you guys will be talking and listening about the really fundamental institutional aspects of managing commodities well. Arrangements that prevent the worst of commodity mismanagement, of which we have some cases in the world, including in our region. So I thought that my presentation at the beginning can give you somewhat of a context for this conversation by giving you some thoughts and some description of how commodities affect macroeconomic performance in Latin America. I'm sure you will not come back to this, but I want you to remember throughout the day that even if you have the best institutions to administer the resource wealth in ways that are inclusive, environmentally responsive, and that prevent corruption and the bad sides of the abundance of natural resources, even if you have the best institutions, you still have a macro issue, which is that commodities in Latin America are central to how our macroeconomies behave, the challenges that those things poses. And we are now learning in my office through recent research, commodities are also central in unexpected ways on how income gets redistributed in society through the labor markets. So commodities have huge macroeconomic implications, both when they are going up and when they are going down. And they have also important redistributional implications, even if you have very good governance institutions. So I want you to keep this in mind throughout the day, and I brought some pictures to make that case. So first, let's begin with a cycle. You know, I think it's fair to say that the last has been a super cycle. It has been a super cycle in duration, and you can see it here that if you take out this dip, which is associated to the global crisis where the U.S. almost brought the world to its knees, as a result of the subprime crisis. If you take out this dip, what you see is a prolonged increase in prices throughout a period of about 10 years that made many countries in the region believe that this was here to stay. We had never had such a long, prolonged period of such buoyant prices. But it was also extraordinary super cycle in the sense that, this graph requires some explanation, in the sense that all relevant commodity prices, all prices of commodities that are relevant to Latin America, let's put it this way, were going up. When you look at the history of commodity price movements, which is provided in this graph shows data from 1962 to the present, which is when CEPAL started collecting all of this data. What you see is what we did is for every year, we identified the commodities that were really important for the region. And we saw what was happening with those 16 commodities year by year. This has been changing over time. Of course, sometimes coffee was more important than oil, but we were going year by year thinking which were the 16 commodities most important to the region. And here, what you have is the percentage, in blue, the percentage of those 16 commodities whose prices were going up during that period. And in red, what you have is the percentage of those commodity prices, of those commodities whose prices were going down. And what you see is that throughout the history, there was always mixed performance. While some commodity prices were going up, others were going down. But look at what happened in the last cycle. Every relevant commodity was experiencing a price lift. So you had a boat that lifted all of the boats. We have not, at least in recorded memory, recorded recent history, we haven't had this type of extraordinary super cycle where every commodity price goes up. Every commodity price where the commodity matters for the region. So it's really what we called in a recent report a very comprehensive cycle, not only a cycle that was important in duration, but it was important in terms of coverage. And the increases in prices were, of course, very significant. Almost 100% of the commodity basket of Latin America was experiencing price increases. The third point to remember is that commodities matter a lot for Latin America, and it is a very much a Latin American unique feature. It is particularly strong in South America. This is a graph where you have several measures of commodity dependence of an economy, of how dependent an economy is to commodities, compared to the rich and advanced economies. So the rich and advanced economies indices of dependence are in this interior figure, and this is Latin America. And what you see is that Latin America is very far away from the world in terms of depending on commodities, both for the total economic activity. A very large share of GDP depends on commodities, for exports, and for fiscal revenues. So our economies, the function of our economies, the fiscal process, and the external and trading process is heavily dominated by commodities, uniquely so, much more than in other parts of the planet. This, of course, creates a very sad situation for Latin America, which is this is a sad graph, and I'll explain to you why. This is a graph where, in my office, we have a little regression where you put 4 variables. All of these 4 variables are variables that Latin America cannot control. But you put those 4 variables and you get an almost precise prediction of where growth will be. So here is in red, you have the actual growth rates in Latin America. And in blue is what this little simple regression predicts. What are the 4 variables? Growth in China, commodity prices, growth in the US, the interest rate in the US. None of those factors can be controlled by Latin American policymakers. They are completely exogenous to what we do. We can behave well, we can behave poorly, those things will have their own life. They determine our growth pattern, almost exactly. It's very depressing because it means that growth fluctuations are not ours. They depend on the world. If the world is blowing winds in our favor, we do well. If the world doesn't have winds blowing in our favor, we don't do that well. So it's like growth fluctuations belong to the world. Our growth, the one that comes from our own merits, if you want to say, is the dotted line. That's the average growth. That's our trend growth. So when the world is not helping, we do this. And when the world is not hurting us, we do that. So on average, we grow at around 2.5%. This is Latin America, a very slow, growth-challenged region. And it's really sad to have to recognize that when we do well, it is not typically our merit, but the good luck. Now, that's why this is a very depressing graph, because what this means is that now that the commodity cycle is over and our growth rate is coming down, we're actually going back to the historical growth rate, which is this low rate of about 2.5% and 3%. And it's not difficult to conclude that with 2.5%, 3% growth rate, Latin America it will be impossible to reproduce the type of social progress we had in the last 15 years. And so we are in for bad social tensions, because we have a population in Latin America that got used to a fairly strong rhythm of social progress, where middle classes were growing, poverty was coming down, and the inequality was falling. And this happened for about 10, 12 years. So this is what's in the psyche of Latin Americans. They got used to this. And now they are seeing that all of that progress is stalling. I hope it will not be reversed. But you don't have to reverse the progress to get social tensions. You just have to stop the rhythm of progress. And this is what's already happening. So because commodities matter so much for Latin American economies, they also matter for the terms of trade. In a country like the United States, what happens with commodities does not affect the U.S. terms of trade that much, because commodities are a small share of their trading activity. But in Latin America, terms of trade move with commodities. And this is a simple graph that shows that the commodity price index, which is in red, really moves very closely with Latin American terms of trade. Now, those of you who are macroeconomists know from the beginning that terms of trade are a hugely important variable in macroeconomic performance when they move a lot. For many countries, terms of trade don't move too much, because the prices of exports and the prices of imports don't fluctuate as much as they do for us in Latin America. So terms of trade is a key variable in Latin American performance. And our colleagues in ECLAC have been telling us this since the 50s, since the time of Prebisch. This is a unique phenomenon in Latin America, the relevance of terms of trade in macroeconomic performance. And so what you see here is that terms of trade in Latin America we had a bubble. We had a terms of trade bubble, where terms of trade had this tremendous increase, and now we are with a bubble bursting, if you want. Now, of course, this created a bifurcated region, because terms of trade moved very strongly for the countries in South America, but they moved in a different direction for Central America, and for Mexico they were flat. So what happened with the macroeconomy of the regions was largely bifurcated by how much we were affected by the terms of trade bubble. So in the rest of the presentation, I'm going to focus on these countries, on the South American countries where the bubble has been the most powerful. So the fact that part of the region benefited from the commodity boom and the other part of the region didn't has also bifurcated growth patterns in the region. So here you have South America, and if you plot South American growth here, it is remarkably close to growth fluctuations in China. So South America is in the China cycle since 2002, 2003. What happens in South America is much more influenced by what happens in China than what happens in the US. There were some times, long ago, in the 60s and the 70s, when we Latin Americans used to say that if the US sneezes, we catch pneumonia. Well, it was true. But now the US can sneeze and can do a lot of things, and we in South America don't feel it as strongly, but really we get hit by what happens in China. So for South America, China developments have become dominant. For Central America, the Caribbean and Mexico, their growth pattern in red moves very closely with what happens in the US. So right now we have a Latin America that's really in two different cycles that are not synchronized. Thank God they are not synchronized, because if they were synchronized, we'll be in a global slowdown, right? Thank God that the US is pulling the world up while China is pulling it down, and things more or less even out. So this is the bifurcation in the region. So look at South America. So what happens when your terms of trade go up? Well, this is a little lesson on Macroeconomics 101. When terms of trade go up, you feel rich, because without increasing your volume of production, your exports can buy more imports. So the nation immediately feels, oh my God, all of a sudden I'm richer. So there's this, what we call this income effect of a terms of trade increase. So Ecuador, for instance, produces oil. The volume of oil that Ecuador produces has been flat and falling. So nothing to do with production. But the price of oil went up so high that Ecuador was rich, even though it didn't make any effort to produce better or to produce more. So this is a huge increase in purchasing power of a nation when terms of trade goes up. That increase in purchasing power is so phenomenal that if you just let things happen, almost anything can happen. You can go and get drunk because all of a sudden you became rich. You know, all of this money, you throw a party, you invite your friends, you get drunk. Or you can say, my gosh, I'm becoming rich, but this may not last too long, so I better save. I better put some money aside. But this is caught up in a political process. The nation has become all of a sudden rich, and so you have either a very prudent government that has a dialogue with society and says, what are we going to do with this? Or you may have a government that decides to waste, and that's Venezuela, right? And the whole process gets so corroded that institutions get infected because there's so much wealth that you can just throw it around. So what happened in Latin America was precisely that. As terms of trade were going up, we had this huge expansion in spending, in aggregate spending, what we economists call aggregate domestic demand in particular. So this is that sharp rising aggregate domestic demand that mirrored very neatly what happened with the terms of trade. And now this is what's happening. You have a veritable collapse in the rate of growth of domestic demand, which is in line with a collapse in terms of trade. So this is huge, because Keynes used to talk about that. Keynes was interested in aggregate demand. We in Latin America are interested especially in the aggregate domestic demand. And so you had sharp rise in terms of trade, and all of a sudden everybody spends more. Some of it goes to investment, some of it goes to consumption, but the spending goes up dramatically. And this is the first point I want to say. Terms of trade move domestic demand, aggregate demand in Latin America big time. You don't see this, you don't see this in the US. US economists have a hard time understanding this. US economists think that aggregate demand fluctuates along the business cycle a little bit, and you do some monetary policy to stabilize it. But in Latin America, aggregate demand fluctuates much more because it's so responsive to this factor like the terms of trade. And so you see big expansions in aggregate demand in the countries that experience large terms of trade increase. This is the more you're to the right, more terms of trade increase, and less expansion in aggregate demand in countries that didn't have terms of trade boom. That's Mexico and the Central Americans. So big first link. Terms of trade affect aggregate demand dramatically. Now, Macroeconomics 101, aggregate demand has some components. It has essentially aggregate domestic demand has two essential components, consumption and investment. So whether this expansion was mainly consumption or mainly investment is a key issue in the macroeconomics of terms of trade. Once aggregate demand goes up, you have your currencies become stronger. So this is what this graph shows. Terms of trade going up, aggregate demand going up, and the real exchange rate appreciating. So during the last 10 years, Latin America, one of the macroeconomic responses to the terms of trade increase was very strong currencies. That's why the Brazilians were walking around Disney World and all over. I mean, you used to walk in 2005, you would walk the streets of New York and you would hear Portuguese in the streets because there were so many Brazilian tourists visiting because their currencies were so strong that you felt rich, you could go and visit the US and have a good time in New York or in Orlando. So, however, these appreciations of the currencies can have bad side effects. They are good for consumers and for people who are doing tourism, but they can be very bad for industries that are trying to survive in the export market. So what happened in Latin America during the time of these very strong appreciations of the currency is that we lost big time in manufacturing. So this is the share of manufacturing in total economic activity. Because it's very hard to keep your exports of manufacturing competitive and to stay in the markets where your exchange rate is so appreciated. You lose competitiveness big time. And so you have what is called this kind of Dutch disease, where the resource abundance, the terms of trade improvements makes you feel richer, you consume more, you may even invest more, but the profitability of doing exports of non-commodities comes down. And so in the extreme, you have Venezuela, where you have this huge increase in terms of trade. The government spends a lot. Production concentrates only in the resource, which is oil, and it becomes the only game in town. So in the extreme, you have a country that exports oil and imports everything else and stop producing any other thing. You look at the economy now in Venezuela. Venezuela does not produce even marmalades or shoes or things that you expect some local economy to produce. They don't. They import everything because it became an economy completely dominated by this effect where terms of trade led to spending, and spending led to a complete reliance on the source only commodity. So it can have bad effects. You feel rich, you have social progress, you have a rising middle class, but you may lose your exporting ability. And I think Latin America during the last 10 years, South America lost huge amounts of export markets. We became disconnected from export markets that we could have been cultivating otherwise. So, 3 minutes. Many things happen in Latin America, but this is an example that shows that Latin America became very poorly connected to global value chains at a time that everybody else was getting into global value chains big time. Southeast Asia, Eastern Europe. With the exception of Mexico, we really are not there. And I don't have much time to say, but there's another thing that happened. This big expansion in aggregate demand, and I won't have time to explain this to you, but we have ongoing research on this, had very positive pro-poor distributional effects. In particular, it had this phenomenon. What you have here is the increase in the wages of the unskilled workers versus and that's in the red bars, versus the increase in the wages of the skilled workers. So the unskilled workers are less educated workers, the skilled workers are more educated workers. During the boom, this is what happened. The wages of the less skilled, the unskilled Latin American workers increased much more than the wages of the skilled. There are reasons that are technical as to what happens, but we find out in our research that this was a direct consequence of this big expansion in aggregate domestic demand that interacted in interesting ways with labor markets. And so we had a very progressive terms of trade bubble. And now the bubble is bursting. We have the big question as to whether we are in for a regressive labor market dynamic process, which will add to the tensions. And I won't have time to go into that. So let me just give you some final thoughts because I'm running out of time. So big point, first point is that commodity prices have first order macroeconomic and distributional effects in South America particularly. And therefore they give rise to a host of macro policy challenges. The one variable that comes as hugely important is to save or not to save. Macroeconomic performance is affected forever depending on how you manage the commodity booms, and in particular whether you have the discipline to save. Very few countries can have that discipline. Politics are not helpful when you have a lot of money coming in. So saving rates are key in determining the persistent and the amplification effects of terms of trade bubbles, and therefore whether you save more or save less determines what happens with your real exchange rate, with the cost of capital and wage inequality throughout the cycle, both in the ups and in the down. When you don't save too much and you have excessive spending effects, you can have a good feast, a good party for a while, but you can undercut your long-term growth rate. And that can happen even if the worst of the resource curse does not happen. So you could avoid a lot of corruption, you could avoid rent seeking, you could avoid institutional corrosion, but if you don't save well during the boom, what you end up is with very strong appreciations of currency that destroy your capacity to diversify exports and diversify the tradable sector. And if you have not been careful during the boom, when the bubble bursts, you may actually be in big trouble. And that's Brazil, right? The bubble burst, and now Brazil is facing big macroeconomic problems again, whereas Chile is not, Peru is not. And they were, not yet. I don't want to be too optimistic. So now as the bubble is bursting, we're going into this big, great deceleration. We're going into the 5th year of deceleration, 5 years. It all started in 2012 when the bubble started bursting, and Latin America growth rate started falling, and now we are in negative growth in South America. So 5 years of deceleration. And what we're finding out is that how well you do during this period of adjusting to the bubble burst is not independent of how much you sinned during the boom. No? Whether you were more prudent or less prudent, and it becomes a tale, almost like a tale of virtue. You know, how virtuous were you during the boom and how not. One issue to remember, and this is hard for us it's hard for me to remind my colleagues, that when the bubble burst and you have a permanent change in commodity prices, there will be pain because you thought you were richer. Now you find out that you were not as rich, so you have to adjust your spending patterns. You have to adjust, you have to realize that your purchasing power is not as high. So there's all of this talk about counter-cyclical policies, as if we could change the prices of commodities with counter-cyclical policies. We can't. That's an exogenous fact. So the challenge for us is to adapt to the new constellation of external factors in ways that are socially efficient. Purchasing power has come down. The issue is how can you distribute that burden appropriately? Can it be done fairly? Can it be done efficiently? Can you avoid excessive economic contraction? Can you avoid excessive damage to the labor markets? But you cannot avoid the need to adjust to this new equilibrium. You were here, you have to adjust to this level. And that's a big challenge for politicians. Overall, when you deal with commodities, the premium is on fiscal prudence, and the premium on saving tends to rise. And this will be something that we have to remember. It's a big lesson we have to remember, and it will be with us as long as commodities are so important in our economic patterns. Maybe one day we'll have such diversified economies that commodities will be a small part of our economies, and then we will be in a different story. But as long as in Latin America, and this will be for many years, as long as in South America commodities are an important part of economic life, how we manage the macroeconomic implications of commodity booms and busts is absolutely essential.
Thank you. Thank you very much, Augusto. If you talked about this as being sort of a little bit of macro 101, but I can assure you that if you had been teaching my college courses, I would have ended up as something more than a journalist. So. I'll just put 3 fingers there. Yeah, this is the great deceleration.
Ok. Comenzaré con una frase y finalizaré con la misma. Que no existe la maldición de los recursos naturales. Existe la maldición de tener que hablar después de Augusto de la Torre, uno de los mejores speakers que he escuchado en las últimas décadas. Así que, Augusto, me dejaste la vara demasiado alta. Complicado. Sea ECLAC o CEPAL, you did a tremendous job. Y como decíamos antes con Augusto, efectivamente hay una complementación muy buena entre la presentación de él y lo que voy a hablar del lado, desde el sur, digamos, desde Santiago, desde la CEPAL. Sé que el tiempo es muy corto, sé que Cintia... así que tendré que sintetizar mucho la presentación con los mensajes principales. Antes de todo es naturalmente saludar y agradecer mucho a Wilson Center, de parte no solo mía, sino también de la secretaria ejecutiva, la señora Alicia Bárcena, que lo tiene muy, muy presente. Bien, entonces, veamos, ya lo hemos visto, auge de precio, la materia prima, el crecimiento económico del boom, no hay mucho más que agregar. Lo que hay que agregar es que efectivamente la región no logró aprovechar el potencial de inversión que tuvo en ese momento. Estamos totalmente en línea con el pensamiento de Augusto y de su team en este sentido. El auge financió la expansión del consumo, exactamente lo que se dijo anteriormente, el famoso gran auge de precios, el patrón no virtuoso de la región, ¿no? De baja matriz productiva, de baja diversificación, expansión del consumo, de bienes importados. Esto ha sido ampliamente y muy sólidamente ya presentado por Augusto. Eso sí, y esto es un punto fundamental, Augusto, América Latina y del Sur en particular sigue teniendo una dotación de recursos naturales excepcional, que el mundo nos envidia. Yo soy italiano, pero en este momento estoy hablando, yo creo que todos se dieron cuenta. Pero tengo que hablar y hablo con mucho gusto en nombre de América Latina. Hay unos recursos que nos envidian, de todo tipo. En términos de agua, 34% de los recursos hídricos están en América Latina. Después del Medio Oriente la mayor reserva petrolera, el cobre, el Perú, el México, Perú, Bolivia, el más principal en plata, el hierro. Es decir, estas son cosas muy importantes. Es muy correcto decir que si China o Estados Unidos estornudan, los demás pueden tener algún tipo de enfermedad. El tema es que ellos siguen necesitando lo que tiene América Latina. De lo que se trata es tener una buena vacuna contra el estornudo de aquellos que siguen necesitando los recursos de América Latina. Entonces, esto yo creo que es un enfoque que sería muy interesante que fuera uno de los temas principales de la discusión de hoy. Persisten las debilidades, lo sabemos, la dependencia, la baja inversión en infraestructura, el tema de infraestructura fundamental, rezago de innovación y tecnología, un tema a mi parte, yo soy físico nuclear, el tema de la innovación y tecnología es algo que veo debilísimo, muy débil en América Latina, hay muchas cosas que hay que hacer, y distribución poco equitativa lo vimos anteriormente. La coyuntura es compleja, precio bajo, pérdida del dinamismo del comercio internacional, lo vimos sólidamente en las gráficas de Augusto, caída en el consumo, la inversión, menores ingresos fiscales, obviamente, hay menos plata, entra menos plata, incertidumbre del mercado financiero. La coyuntura es compleja, la caída es evidente, el precio del petróleo también, hay algunos que están felices y otros menos, como justamente decía nuestro moderador hoy. El sector de los hidrocarburos, esto es algo que justamente se me solicitó como un elemento interesante, las expectativas del sector de hidrocarburos. Esto es interesante. El mercado del petróleo, las curvas, la línea roja son los varios valores de contrato de futuro en el tiempo. Es decir, más allá de la reducción del precio del petróleo, también la expectativa de los mercados y de los contratos de futuro han venido bajando. ¿Qué significa? Que aquí la depresión de precio podría durar un periodo bastante importante. Naturalmente la razón todos la conocemos, exceso de oferta, incertidumbre OPEP, naturalmente Rusia, el Irán es naturalmente un gran actor, un nuevo actor que va a inyectar siempre más insumos, siempre más recursos en el mercado, y un crecimiento chino, por supuesto. La China para América Latina comienza a ser, y hace tiempo lo es, pero ahora con una contundencia importante, un elemento fundamental de referencia. Y este es el caso del gas natural en Bolivia. Esto también es un caso interesante. Como muchos de ustedes saben, el gas natural de Bolivia es indexado a los valores de exportación, en este caso del fuel oil. Saben todo, Bolivia exporta a Argentina y Brasil, por lo tanto hay una directa relación. La previsión es, nosotros nos lanzamos de alguna forma con datos internacionales a hacer una previsión de solamente 2 años. No nos parece que en este momento de grande volatilidad tiene sentido hacer grandes previsiones a decenas de años. Pero sí, lo que sí se puede decir que el precio de exportación de Bolivia fuertemente dependiente de hidrocarburos, no va a ir mucho más allá de los $3.5 al millón de BTU, que es un valor extremadamente poco interesante desde el punto de vista de ingreso fiscal del país, evidentemente. Una serie de elementos, esta presentación estará disponible, yo sé que tengo que correr, así que ahora hay un tema de competencia por el caso de Bolivia, es decir, hay también mercados externos, además del mercado interno, que pueden ser una competencia importante para los recursos de un país latinoamericano, es decir, el LNG de Estados Unidos, al precio de spot del Henry Hub, está más barato que el gas de Bolivia. Ahora, si le ponemos también los costos de operación y de transporte, es superior. Pero sí, lo que podemos decir es que en algunos casos los recursos de hidrocarburo y de extractivo en general de América Latina pueden tener competencia también de otros países. Es decir, se agrega una complejidad, Augusto, al hecho de tener recursos. La propuesta de la CEPAL. Afuera yo dejé un pequeño folleto que representa la propuesta que tenemos en términos de nueva gobernanza de los recursos naturales. Estamos totalmente en línea con la propuesta de Augusto en este sentido. Es decir, aquí hay que ver cuál es la característica de la vacuna, cómo construimos la vacuna. La vacuna necesita una serie de elementos de política pública que sean más allá justamente del tema contracíclico. Aquí hay que comenzar a tener políticas estructurales, responsables, sólidas de largo plazo, con una serie de elementos. Primero es una estrategia política de Estado de largo plazo, con diversificación productiva, cambio estructural, inclusión social. Voy a ser lo más rápido posible. Política pública número 2, el elemento, marco tributario para progresividad de la participación de los estados en la renta. Yo tengo una serie de gráficas, no tenemos tiempo, pero están en la presentación. Está clarísimo que en estos últimos años ha habido una regresividad en muchos casos. Países no han aprovechado, otros sí han aprovechado, pero se trata de momentos spot, de políticas absolutamente del momento. Aquí se trata de tener visiones de mucho más largo plazo, política de cierta solidez. Tercero, mecanismo de estabilización, ahorro e inversión. Lo que Augusto decía, comenzar a ahorrar, algo que algunos países han comenzado a hacer, otros están todavía muy lejos, naturalmente, de hacerlo. Fondo soberano de inversiones o otro mecanismo. Hay algunos países, por ejemplo, Chile, que ha puesto 5.6% de su PIB para el Fondo de Estabilización Económica y Social, con un índice de transparencia 10, es decir, hay países que están trabajando absolutamente bien y otros tal vez menos, el último, no digo el nombre, pero está claro que en términos de transparencia y de responsabilidad hay todavía mucho espacio para progresar en este sentido. Cuarto, fortalecer capacidad de las instituciones. Es decir, más allá de tener instituciones, lo que se necesita es tener instituciones sólidas, capacitadas, con funcionarios que efectivamente entiendan los diferentes sectores, los diferentes desafíos de todo esto. En términos, por ejemplo, pasivos ambientales mineros, derechos de los pueblos indígenas, entre otros, transparencia, información pública, son unos elementos relativamente nuevos, desafiantes para numerosos países de la región. Esta es la visión que nosotros estamos promoviendo, es decir, de una situación de gobernanza evidentemente poco eficiente, a intentar tener una visión común latinoamericana, ojalá que se pueda, no será fácil evidentemente por las peculiaridades de los países, una forma, establecer un pacto regional sobre la gobernanza hacia una nueva gobernanza. Esta naturalmente es una visión conceptual muy desafiante, muy compleja, pero en esto queremos trabajar y estamos trabajando. Ya comenzamos en mayo de 2014 en el periodo de sesión de la CEPAL, con el endoso de los países a que la CEPAL trabaje en esta nueva idea, en esta propuesta. En 2015 con los ministros de la región. El 2015, en diciembre, nos juntamos con los líderes indígenas en Panamá, el grupo grupo interregional de pueblos indígenas, para escuchar la opinión de ellos sobre este tema. Recibimos recomendaciones muy interesantes. Estuvimos la semana pasada en la Extractive Industry Transparency Initiative en Lima, estamos ahora en Windsor Center, próxima semana estaremos con el sector privado y sector público para presentar, para escuchar en este proceso que llamamos consulta y consenso, y después World Economic Forum y otras actividades. Tenemos una hoja de ruta que pensamos debería ser un conjunto de estudios, debates, actividades de diseminación para discutir una visión común. Naturalmente la viabilidad social es para nosotros un elemento fundamental en este sentido. Voy muy rápidamente. La propuesta es crear en la CEPAL, ya lo tenemos en forma de germen, pero crear en la CEPAL un centro para la gobernanza de los recursos naturales. Un centro para que se puedan discutir de forma conjunta las mejores prácticas, políticas, legales, económicas, tributarias, ambientales, que sea un centro de referencia para esta discusión, una plataforma regional neutral, esto es lo positivo de la CEPAL, no es un banco, no es, es una institución donde efectivamente se pueden dar las opiniones oportunas. Un objetivo es naturalmente crear una hoja de ruta para construir una visión y llegar a un pacto en este sentido. Esta es la estructura, la idea de un centro de la gobernanza que apoye este tipo de proceso. Vamos a buscar un leading natural resource economist, alguien que pueda ser el líder de este centro. Ya tenemos personas para trabajar en diferentes temas, pero queremos reforzar en este sentido. Yo creo que con esto puedo terminar y repito la frase inicial, pero con un poco de cambio, y que es lo siguiente, que no existe la maldición de los recursos naturales, existe la maldición de la ausencia de políticas responsables que usen de una forma sostenible, sostenida, la renta de los recursos naturales en América Latina. Gracias.
Thank you very much. I think you may have melted the microphone. You were speaking so quickly, but I appreciate that. And so I guess I'd like to start by sort of getting a sense of more of a sense of what the future might hold in terms of some of the trends that you outlined, Augusto. You pointed out that China, of course, has been a huge market, and South America in particular has become strongly linked to that. Is there any prospect that anyone could take the place of China in terms of, being a destination for the commodities that South America has exported? I mean, it really seems like it was sort of a once-in-a-lifetime moment.
I think that how much was the result of China just joining the international economy, and then we have more of a plateau versus how much is there likely to be another rise in the demand for commodities is an important question. My own sense is that we are not likely to go back to the type of a demand surge in the world like China provided again for the mineral commodities. So my sense is that in Latin America, in South America in particular, we're going to have to learn to continue to produce and sell minerals, perhaps improving the connections to the rest of the economy, the backward linkages, the technology, and so forth, but at relatively more modest prices. So the revenues that we will make will depend more on the ability to produce efficiently than on the international price.
And do you have any speculation, and I know it would be that, as to when prices might return to kind of the rough equilibrium they reached right after the peak?
Something like what Manilo had of, say, oil prices at 50 or at 55. Most people think that may be the price that may obtain in the future, and in some sense, these prices are always so volatile, in particular oil, because oil depends also on some geopolitical things, whereas copper may depend more on true demand-supply type dynamics. But I really don't have a good sense of that. What I notice is that when all my colleagues that are forecasters do not know what to say, they just essentially predict something that's very close to what we're now seeing.
Right. Manila, do you have anything you'd like to add to that on that point?
Yes, I was calculating how much does cost today a liter of crude, of oil. Is 4 cents and 4 cents of dollar. Do you know any resource in the planet of 1 liter of something that costs 4 cents? I mean, doesn't make any sense. What I'm saying is that the price can be anything, anywhere, depending on the strong forces that the planet will put in place. I don't know if you get my point. I mean, why saying 55 or why saying 1,000? Is at the end of the day, a barrel is 156 liter of something, a very precious product of the planet. It took 1,000 million a year to produce that, and we only sell it today at 4 cents. Something is missing in here. So it's very difficult to say where the price will go. It depends on so many things. Just for your information, I was in Abu Dhabi a few weeks ago for the IRENA, the Renewable Energy Agency meeting. I was speaking with the Minister of Energy of Abu Dhabi. I don't remember the name, but some chic.
You're probably safe.
And I said, I'm sure you're very worried about this price. And he said, why you say that? I said, because $30 is, but you know, it cost me more stopping a well than letting produce it. So anything above zero is okay for me. So it means that why saying 50, 60, 1,000, 3? There are so many forces regarding, of course, we are talking about oil, that can modify this number. Just stupid number.
Well, given this,
there's no reference between the product and the price. Absolutely.
Well, given this unpredictable world, that unpredictable pricing world that you're talking about, but the fact that it looks like they're going to be lower than they were before, what are some of the more effective hedging or risk management strategies that commodities producers can pursue that will, create the kind of sustainable growth that we all want to see?
Well, the first order of business is to have a good understanding as to how much the revenues from commodity production and exporting matter for the fiscal process. You have countries for whom they don't matter a lot, and countries where they matter immensely. So once you have a fiscal process whose capacity to produce public goods depends on a sensitive commodity whose price can go any place, then I think the first order of business is to convince society that you cannot live and die depending on the price of that important resource, and that you have to learn to smooth out particularly your public spending and your social policy in ways that are not killed by the price. And
Right.
that's how the idea of these stabilization funds appear. Chile started with a stabilization fund, but you have the governance issue is central to this, because once you have a stabilization fund and you have $5 billion in that fund and it's all cash, it whets the appetite of politicians. And you have that very understandable political debate where the politician says, why do I want to keep $5 billion in cash in a bank in the US when I have so many needs for education and for health and for bridges and for highways? And that's a very tough debate to have because of course you need the education, you need the bridges, and you need the highways. And so you have it. What I have found out in the region, it's very difficult to protect stabilization funds.
Are there other examples beyond Chile where people have really succeeded in doing that in the region?
Peru has gotten a little bit ahead on that.
Mm-hmm.
You have a nice graph.
Yes,
where you
yes.
have the
Peru
funds.
is the second best somehow.
Right.
Right. in a sense.
Then you have the second order, which I think is so. One idea you have to do is, how am I going to stabilize public spending so that the fluctuations in the price of the commodity does not wreck my fiscal process? That's one. The second one, if you have a huge boom, you not only want to stabilize, but you want to save for long-term investments. And that's how the idea of the sovereign wealth funds appeared. For me, there's a difference between a sovereign wealth fund and a stabilization fund. The stabilization fund has more modest objective of just stabilizing your public spending. The sovereign wealth fund is a much more ambitious idea, which is the Norway idea, where
Right.
we have these resources. There's no way our economy can absorb them all in the first day, and we have these long-term needs. We need education and scholarships, and we need to solve our pension system. So let's set aside, above and beyond our stabilization needs, let's set aside some money with a view for the really long-term development issues. If it is hard to protect the money for stabilization fund, it may be even harder to protect savings that have a very long-term view. And that's where I think the question of governance is at the heart.
If I could just kind of drill down on one thing that Manlio was talking about, when he talked about changes in tax structure and things like that. Obviously, mineral and extractive companies are big, easier to tax, and easier to tax than agricultural companies in many ways. But aside from making the tax structure more progressive, what other changes need to happen in order to just kind of increase revenue generally? I mean, when you talk about changes in taxation, what are you talking about?
Well, last week in Lima at the Extractive Industry Transparency Initiative meeting, we had a large meeting with Anglo-American, with an executive Anglo-American. We presented to him this idea of having a place to sit down and discuss all this. We don't have right now a recipe. The idea is building up in the next future with all the stakeholders, the best recipes for each specific country, depending on the macroeconomic situation, the constitution of each country, but having the same vision for the future. So I cannot give you specific recipe, but we want to build it together with all the stakeholders, with civil society, government, and private sector.
But isn't it, I mean, you know, we in the media love to come up with snappy phrases like pink tide and stuff like that. And isn't now sort of a difficult time to come up with that sort of consensus? Is it possible to forge that kind of a consensus when you have, you know, governance models or attitudes toward, you know, seemingly shifting?
Right, but that's the challenge. I mean, there's someone always in life that needs to challenge something, and I think is good time to do it. And we really hope to also together with World Bank to start thinking about to put on the table of discussion these issues. I mean, the time is now. I know the time is difficult, but the time is now to sit down and discuss the best way to do it.
Yeah, I would agree with the fact that this time where there's not much abundance, maybe a good time to talk about credible long-term tax structures for extractives. But that requires quite a bit of design skills, and that's why I applaud the idea of having a place where you can discuss the good practices in taxation. Canada, for instance, is mentioned as a place where you have a very sound tax structure around extractives. For it to be sound, you have to begin with the fact that taxation of extractives have to deal with the issue of rents.
Right.
Where the rent can go up dramatically in a period when the price went up, or it can compress a lot, and to the point that you close the extractive operation. So these huge fluctuations in the amount of rents that accrue to the production process of these extractives needs to be incorporated ex ante in your tax system. Otherwise, you have the typical fights that lead to some cycles that are not very good. For instance, Bolivia is a good example of cycles that are not very good. During the times when the prices of commodities are low, the government is not making too much revenue, the public enterprise dealing with a commodity is not very efficient, so you privatize. And then foreign investors come and they go into Bolivia and they start making the production more efficient. Then the price of that commodity goes through the roof, and the government says, too much money is going to the private sector. We need more. And you get into a fight that sometimes ends in nationalization.
Right.
So Bolivia has these cycles of privatization, nationalization, precisely because there is no sound, robust system of taxation that endures and can stay well during the ups and downs, where the society feels it's fair. Because of course there's a feeling that there are all of these mineral companies becoming rich because the price is high and the society is not sharing it. So you need a taxation that allows sharing the upsides, sharing the downsides, and designing it well is a huge challenge.
And my understanding is that although the Canadians have done very well on the taxation side, I think in Alberta they haven't done that well with their so-called stabilization fund. You know, that didn't quite pan out. Well, I guess I want to open it up to folks who are much smarter than I am, and that's you, for questions. I'd ask, we'll try to take a couple at once. I'd ask that when the microphone arrives, you identify yourself and please try your hardest to ask a question. So the gentleman back there, thank you.
A good point.
Peter Bogart, I have worked in Latin America about 50 years ago and then switched to Asia at the World Bank, and now I'm working in Germany in an Institute of International Studies. And I think what we need to do really is go down to individual countries. There is a clear change having taken place, particularly the countries you mentioned, Chile and Peru. They have indeed better integrated with the Pacific trade. And clearly, on the other hand, countries like Brazil and Argentina have not participated in that degree. But fundamentally, I think it comes down to politics finally, how the governments have been able to continuously indeed adjust to a situation all of us know for a long time, and it is indeed depressive to see you know, how little has changed.
I'm hoping there's a question mark. I'm hoping there's a question mark coming here.
The question is indeed, is, you know, can we discuss a bit more this, you know, the diversification of the individual countries in order to get some kind of, I think, more diverse picture.
Thank you. There in the center, if you please. Thank you.
Hi, Estefania Marchan, Inter-American Development Bank. My question is, Augusto talked about when spending went up, some spending went to investment, and I was wondering if you could talk about some examples of some of the more productive investment that you saw and what that looks like.
Thank you. Another, please.
Good morning. Carlos Indacoche. I'm an independent specialist in social development. Everything is up in the air, but in terms of better governance. But I surely think you have an impression about what is better if the private property of the subsoil and resources or the state property as exemplified by the U.S. and in Latin America.
So I think we'll stop there for now, and then we'll open up another round in a second. So please.
These are really great questions. The first on individual countries, I think the range is huge. So for a project like that of our colleagues in CEPAL, which I think is one of the challenge will be how do you bring to the conversation a country like Peru or Chile with a country like Venezuela, all in an effort to improve governance. One thing that one expects from this process is that there can be learning, and there can be better practices, and countries that have weaker governance structures may actually can do some leapfrogging because there are other examples that have been tried and proven. But one thing is true, and this is the positive thing, that with the exception of Venezuela, I think we have moved away from the old enclave approach to mineral production. You know, there were all of these books that I used to do when I was leftist and young, and you know, the open veins of Latin America and all of those things. Those books described a way of producing commodities that was very much an enclave. You had a mine, and you had people working in very bad conditions. You had a railroad to take the mineral out of the country to the port, and that was it. And the rest of the economy somehow did not benefit from that production. That pattern of enclave production, I think, is no longer in Latin America. I see more technology. I see more connections. So I think we start from a better base to talk about governance. That's the first. Second one, it is true that you know, that the terms of trade increase produce this spending effect, and you have to see which countries spent in consumption and which countries invested more. And you have huge difference in the region. Broadly speaking, what you see is that Brazil was a country where the commodity terms of trade boom largely went to consumption. Peru is a country where it largely went to investment. It went into investment in extractives to a large extent. Ecuador is a case where in the first part of the boom, the spending was largely on public investment in infrastructure. But it's interesting to realize that if you don't make an effort to put some of that windfall outside the country, you can be stuck. So for instance, in Ecuador, you have this problem that much of the windfall went into building infrastructure, and now you don't have liquid savings that can help you manage the transition. And you cannot sell the highways to make them into cash, right? So there's also the issue of how do you invest, how much into liquid assets, how much into illiquid assets, how much you keep them in the country, how much you put them aside. All of these are part of this complicated macro discussion on how to manage oil. And then the last issue as to what is better, private or private, I really don't think that there is a simple question. You know, you have Chile, have a wonderful example of essentially a state-run operation, but through a corporation that behaves like a first-rate corporation. and then you have Pemex. So when we talk about governance, rather than having an ideological view that it has to be done by the private sector or the public sector, really the important thing is whether the governance, whether it's public or private, makes sense. But I think you may have a different question.
That was not exactly the question. The question is, who owns the resource in principle? The crown, the sovereign, or the private proprietor of the service?
Yeah, that's
That's
CEPAL has strong
No, the issue is so complicated that the same World Bank in 4 days in PDAC Toronto is organizing an event, a very interesting event, in which one session it will be specifically dedicated with a question mark with that question on the which would be the best scheme of property for specifically mineral extractive. So of course is a tremendous issues, but as the gentleman for Germany said, Latin America is a very articulated environment. So you have everything from Suriname to Brazil. You go through so many peculiarities of country. Now, we do think that being responsible is a global value. Having a good governance can be defined, and then once again each country can behave accordingly. I think this is, and I think time is is over.
Do we have time for one more round, or very very quick? Who, please, in the oh yes. Okay, please in the center there.
Thank you. My name is Agustina Giraudy. I'm a professor of political science at American University. And I have a question about politics and the politics of deceleration. And so I was wondering, so this center you're trying to create, Augusto pointed out that one of the main challenges that you might have in the future is how to work together with so many different countries, right? And so I was wondering about the politics of each commodity. And so I was wondering if we need to start thinking about, I mean, managing oil is very different from managing soybeans. I am from Argentina, and I know that for real, right? And so I was wondering if we should start thinking about the politics of each commodity as well, right? And how we also think about not only the politics, but how different commodities affect economies in very different ways. Oil again, is very different from mineral resources, and whether you should incorporate that as another variable to start thinking about the new agenda, the future agenda of natural resource governance in Latin America.
Thank you. We'll take one more there in the back.
Thank you. Paul Miller, Lutheran World Relief. Hopefully a quick question and a quick answer. Climate change was not mentioned. Do the commitments in Paris or anything that's going to happen in the next 30 years have something to do with prices and the macroeconomic problems you described?
Thank you. Gentlemen?
Yes, when it comes to politics, that's tough. One thing, one of the best things is in the English language, that is the unique language in the world that separates politics from policy. There's no one other language that I know, at least, not in Europe. But it is very relevant. I mean, we at ECLAC want to talk about long-term policies. Now, politics and parties and issues, I'm not sure can be controlled, and I don't think it will be ever controlled until the planet will turn. So I understand your point. I do understand, but that is a very complicated issue. Climate change. In one of the slides I had to run, there is the specific I think the slide where I was saying the main issue, issue to be discussed is the fact that many Latin American countries will be affected very much from climate change, and there is a slide on that. Unfortunately, I have to run, but definitely we think that the climate change issue, the Paris Agreement have to be taken in place. In ECLAC, for example, together with the German cooperation and MIT, this year we will start a program, long-term program, to discuss scenarios, long-term scenarios on energy issues, looking at the impact, for example, of having renewables energy as the driver of energy complementation based on the commitment of the different countries on SDGs, Sustainable Development Goal number 7, and Paris Agreement. So we have it very, very clear in that.
Augusto, do you want to add
Just one thought on this. I think you are absolutely right that the politics are not the same for every commodity. Soy is a good example. It's a very different politics than oil, and oil is very different than copper, etc., etc. My sense is that your initiative covers mainly minerals, right?
At this stage, and extractives, yes.
From the macroeconomic point of view, one thing that seems to matter a lot, we are working on a report that is looking into this a little more, is how do the rent of a commodity accrues to the society?
Right.
Does it accrue to society directly first to the private sector? That's the case of soy. And then the government can tax or not tax that. Or does it accrue directly to the government, which is the case of Ecuador oil or Venezuela oil? And the macroeconomic patterns are very different, the policy challenges are very different, and I think it is worth, from the pure macroeconomic policy point of view, having that clear. It may also affect the governance design. No?
Very much, very much.
Thank you. Thank you very much. I'd like to thank our panelists for joining us this morning. I was remiss in not telling you that their full bios and I believe their presentations will also be available on the Wilson Center website. So thank you so much.
Very much.